Hi everybody, welcome back to another weekly market review for F45Trading.com. This week we are going to discuss September 14th to the 18th. We're already third week of September and markets aren't doing a whole lot. Certainly there are lots of trades out there, especially in a lot of the commodities markets and especially the grain markets actually right now. And Forex is kind of, especially with the major pairs that are tied to the US dollar, are a little bit stagnant. But nonetheless, I think we're probably going to see some movement on that here fairly soon. The economic calendar this week has a pretty quiet Monday and Tuesday. And then Wednesday, we've obviously got the US dollar economic statement, FOMC statement. Sorry, not the economic statement, but the FOMC rate statement, and it looks like right now they're not predicting to move it. It's still at about a quarter basis point, looking like they're going to keep it the same, and that could obviously change going down the road. The next release, they could decide to change that in November. That's right around that election time as well too, so they may want to swing the markets. You can pretty much bank on it that they will. But nonetheless, we've got a pretty busy day on Wednesday. So if I were you on Wednesday, you definitely don't want to have an open position while that FOMC news is going on. And it is later in the day, so it's at 2 p.m. New York time. So what you're going to see on Wednesday is that the trading range will it'll be a longer day. So if there's particular targets to the upside or downside that you're looking at, expect those to get hit a little bit later on in the day. Other than that, we've got core retail sales for the US dollar. We've got crude oil inventory numbers coming out on Wednesday as well. And then we've got Australian dollar employment change numbers at 9:30 p.m. New York time Wednesday evening. So watch those numbers. They're forecasting right now a pretty significant change in that. Previous numbers, unemployment were 114,000. These numbers are negative 40,000, so pretty significant changes. We'll see. I'll talk about Aussie here in a minute, but we'll see if that jars something loose there. And then Thursday, we've got the GBP, or the pound sterling. They have their official bank rate as well, and it looks like they are going to leave theirs the same also at 10%, so no change from last rate announcement there. So the US dollar and the pound are going to be moving quite a bit. Could be a little bit choppy out there, so just watch out for that. Make sure you've got it on your calendars, and when Wednesday, Thursday hits, if you are in those pairs, expect some volatility. Okay, the rest of the week is playing out as expected with some medium impact news events for the dollar, the Fed Philly manufacturing. We've got unemployment claims for the US dollar, which are virtually the same as what they were last month. And then Friday, we finish off the week with some medium impact news events for Canadian dollar and US dollar and the pound. And that's all she wrote for a week. So let's get into these charts here. Keep in mind, remember, Wednesday for the US dollar especially, we're still in this range, though. I'm hoping that we're going to see something shake loose pretty soon. However, if you do see the slide that we had in the summer, I would imagine that it's obviously due for a little period of consolidation. We can see this previous period of consolidation. It took us a couple of months to get through as well, and we're seeing the exact same thing in the current range that we're in. So not that there aren't trades, but you definitely want to be in and out of the market. We're not trending right now, so you want to be 20, 30 pips, 40 pips on a decent range, and call it a day, and do that multiple times a week, rather than just trying to hit one trade, doing 100 or 200 pips in one trade. It may not come to fruition because of the short ranges that we're in, so just keep that in mind. So US dollar going forward, again, we do have that interest rate decision on Wednesday. So I am expecting markets to, let me zoom in a little bit here. I'm expecting markets to dip off a little bit into here. Now I want to see what happens on the week and see if we get back down to this Thursday low here. Of last week. I'm not anticipating markets to trade below this here. It does look heavy right now, and everybody looks like they're probably dogpiling on shorts. But if you look at what price has done, we've obviously ran down, ran higher, took all the stops above price consolidated, and then dropped hard, consolidated, dropped hard, consolidated, and then we dropped lower, dropped lower, dropped lower, and now we're starting to come back up again. So we hit a couple of major areas here on the weekly chart, almost a range back down in here. I'd be expecting a little bit of return higher. What would change that, obviously, is if we lost Thursday's low. But so far we're above that, and we haven't broken down. See this little area right in here where they spent some time back and forth a few times. As long as we don't lose that area, basically right in here, and we stay above it, then I think there's a good chance we could run higher. If we run lower than that area, and that basically, long and the short of it, it comes in about 92.75. If we lose that 92.75 or 92.70 level, then I think we'll probably see further continuation to the downside. But I could see them coming down, have sort of a slower day on Monday and Tuesday coming in, and then Wednesday hitting down here and then shooting prices up. So we'll see what they want to give us this week, but we could see a bit of a mixed bag. And don't be surprised if something like this pans out. If we see a low on Tuesday and the market starts to react and start to gain some momentum for Wednesday, and then finishing off the week strong for Friday. So that's what I'm looking for. If we lose 92.70 level, then, and what is the low here? The low on this candle is 92.68. So yeah, if we lose that 92.70, 92.68 level, and we close down there on a daily, then obviously I think prices are going to continue to roll off, and we'll see lower prices. But until that happens, I think we're going to be up here. But I'm not going to short this pair at the moment, just because of how much we've been shorting. And I'm not suggesting I'm picking the low either. You know, I'm not saying that this is going to be the low. But for now, I'm not necessarily too preoccupied with short positions. And again, only because we've taken the lows, so they have every narrative to push this thing higher. And, you know, to me, it's not, I mean, we're still on a range here. So this thing could really do anything. You know, don't kid yourself, folks. It's still in a pretty tight consolidation. But I am looking for them to possibly drop it down one more time. You know, Monday, Tuesday, maybe hit that low either Tuesday or hit that low Wednesday and then send it higher. But I think there's just a lot of areas up here that I believe is going to be calling price up. I think there's a lot of buy stops up here where everyone was getting short and everybody layers on their stop right up into here. And I think there's a real chance they're going to come down and come back up for those. So that's what I'd like to see. They've really been building the narrative that this thing is going to be a bear flag and that it's going to continue to sell off. But again, we hit a pretty major level on the weekly. So, you know, and don't get me wrong, maybe by the end of this year, we are trading back below here. But I think at least for September anyways, and possibly right up to that election, they could make a run back higher and try to bolster strength for the dollar. Now, you got to keep in mind there are a couple of factors here with the U.S. dollar that you got to keep in mind. Again, there's trade wars going on continuously with China. A cheaper U.S. dollar makes exports a lot more viable, which means the U.S. would make more money. If the U.S. dollar is super, super strong, then the local manufacturers, they lose out on that, and they make a lot more money when it's a weaker dollar. And so, you know, I think that's kind of why we've been selling off quite a bit. And so I honestly believe, not to mention, I mean, they're printing the dollar like crazy, so it will devalue the dollar. It's just a matter of time. But they are pumping a ton of money into the economy at the moment. And so you got to bear that in mind, that, you know, they're buying bonds, they're buying treasuries, they're pumping it back into the stock markets. Yes, stock markets have seen a bit of a sell-off, but I mean, just came off of record highs in a pandemic when it had no business going higher. So, you know, the markets, honestly, folks, they could they could jam it higher, they could jam it lower. Ultimately, I see dollar lower long term. But, you know, when it starts making that move to the downside, then we can get on it. But I think temporarily, I think they're going to try to bolster some support for the dollar. Would look good going into an election. And I think there's going to be a case for them to shoot this thing higher. So we'll see how that goes. But at the same time, got to be nimble. Like I said, make sure you're only taking, 20, 30, 40 pips. Don't hold out for these massive ranges at the moment until we start breaking out of these ranges. And then going from there. So that was US dollar. And remember again, FOMC on Wednesday. On euro dollar, we've got a whole bunch of lows in here that I'd like to see them. This is the other reason I'm kind of looking at the US dollar going lower. We've got euro that is just continuously making higher high, and they haven't come back to run any of the stops below. So I think there's a real likely scenario that we're going to see. We could shoot up into here. That's why I have it labeled up into here. I'd like to see price go up to 1960 Monday, Tuesday, and then after that news comes out for the dollar on the FOMC interest rate, I'd like to see them dump price and see it come down and shoot under here for the remainder of the week, become bearish, and possibly see them give up this range here. Now, if you look at GBP, you can see they've done that already. So they held euro in consolidation and they dumped GBP and ran it south. And I personally believe that they're going to do that to euro as well. And they're just, going to set it up. Now, euro GBP has obviously just been screaming higher. So it's pretty hard to move euro USD lower when euro GBP is screaming higher. We could see a little bit continued move to the upside. They may even want to take out this high here, but I think ultimately they're going to eventually give that back, and then they'll start to green light the downward descent for euro USD, and then we'll see it finally trading under here, and it'll look something very similar to GBP USD. Okay, so I'm not going to worry about shorting GBP USD because, in my opinion, it has hit the major level to the downside. They could take this down another leg, certainly, and come back down and trade right back into this range here. But I think my attention will go to the euro this week, and we'll see how that pans out. But as long as GBP stays below this 129.80 level, I think there's a real possibility that it's probably going to either stay low here or even make one more leg down. Like I say, back down to the consolidation level down here. Do we go lower than that? I don't think so, personally, but you never know. I mean, we've already lost, after they ran these highs here, they've already lost, 700 pips in the month of September, and we're only the, start of the third week in September. So, anything's possible, certainly. UsCad, we're in a bit of a range here in UsCad. We had a nice little pop up higher into here, which was encouraging. Prices just swept above those old highs there, running out the stops, and then it failed to do anything from there. Just kind of consolidating. Now, I'd like to see if we could come back down, and again, playing into that same narrative of if we do see slightly lower prices on US dollar, I'm hoping that UsCad will push a bit lower into the 130.20 levels, the 130 even, and then we see a bit of a pop higher. So basically a drop down into here and then a potential surge higher. That's what I'd like to see them continue up into this range. Again, same thing as the dollar. We hit a pretty significant range to the downside in here and came back down, as you can see, back down into this previous consolidation level here. And as we know, price trades from consolidation to consolidation. So just look back in the previous months and you can see where price is more than likely headed. And if you look at the previous 4 months, we have a huge area up into here. Very, very strong chance that we could see UsCad trade back up into this range here in the next foreseeable couple of months. Okay, but until we break free from this little choppy range right in here, I'm going to hold off on UsCad other than to just watch it and see if we do come down to 131.00 or 131.20, see what the reaction is, if any, and see if we get a bounce in this level here up to the higher premium markets. Australian dollar, again, we have the unemployment rate announcement for Australian dollar coming in Wednesday evening, so I would expect a little bit of movement there. Now, very similar to what I had mentioned with the dollar, US dollar, and with USCad, we've hit a pretty major milestone on Aussie, and what I'll actually do is zoom in a bit, and I'll take it out to the weekly. You can see this old range back in here, these old highs, just popped above that and took that out and rejected very, very strongly. So typically, if you're going to see a continuation higher, you won't see a big rejection like that. You'll see a candle close above these old highs here and then a continuation. You may get a little bit of a retracement, but typically not as deep as what we've seen so far on Aussie, which again is, you know, continuing to build my thesis on a higher US dollar. Just all of the cross pairs right now look like they're going to do the opposite of what the dollar's doing, which is a good thing. That's what you want when the US dollar is the base currency for that pair. Obviously, if it's the UsCad in that instance, then I want this to do exactly the same thing as what the US dollar is doing, because the US, it's the front currency on that. So anyway, Aussie, watch for this on Wednesday. You know, again, we'll probably just see a little bit of chop for the next day or so on Aussie. I don't expect a whole lot of change there. We could shoot this thing higher, maybe take out this high, maybe take out this high here. I wouldn't be as enthusiastic if they took out this high here. But I think if they just keep this in a bit of a range for Monday, Tuesday, and then Wednesday they start dropping lower, I think that's going to be the green light. And obviously we do have the FOMC statement from the dollar, so that could naturally by default just drop this. But it still looks pretty heavy in here. Yes, we shot down in here, taking out this low, and had an immediate reversal back up. But usually when you see something like that, it doesn't stay in a consolidated period as long as this has, and you see a runner. For example, something like this, where price shot down lower than here, came back and then ran, and then shot up again. Whereas, you know, it's taking a little bit too long for my liking. But again, we are in consolidated markets at the time being, so, you know, anything is possible. And, you know, Aussie has been moving sideways for, you know, the past week and a half or so. So we could see a continuation in that direction, but ultimately I want to see this guy lower. And I think as long as we get below this level here at 72.40, if we can get below there, I think then it's just going to be a shot lower, and we're going to sweep below all of these lows under here, and probably get back down into this trading range here in under this 0.70 level, or 0.700 level, I should say, which would bring it. There's the 0.700 level right here. Ish. So I think that would be the target, and I'll maybe change this color to distinguish it a little bit better. That would be the target onto the downside if we get a weaker Aussie, which I think is what's going to happen. So that's my thoughts on Aussie and the Forex pairs. To sum it up briefly, crude oil real quick. I'm not expecting any. We may see a slight run higher on crude oil, but there's absolutely nothing, and you've heard me say this before, there's no demand right now with crude. Absolutely none. There's a ton of storage. They have not gone through. And what was the stat the other day? 190 million barrels of crude oil in storage currently. I mean, there's not going to be any significant production. There's not going to be any significant demand on crude oil, and so I'm not expecting higher prices. Not until everything comes out of the lockdown, pandemic ends, probably whenever this whole vaccination thing comes around and they say, oh yeah, everyone's magically okay to go outside now. You know, let's get back to business and everything's hunky-dory again. People are traveling, planes are in the air, and people are going from point A to point B to get to and from work again. That's not until whenever that starts happening, that's when I see crude oil starting to make a turn to the upside. But until then, I'm still sticking with the narrative that we're going to see sub 30 levels on crude oil. We had a nice sell-off the previous week, and last week, the end of last week, kind of did nothing. It just sort of chopped sideways. I'd like to see if they could come up to this here at about 38.50. See if we can get a shot up into there and then see what the willingness to continue higher from there is. I have a feeling where they could bring that up, sweep this high, and then run it lower. Now, I don't think they're just going to do a straight shot under 30 here to get under 30. I think they'll just, shoot it up, and then, one day at a time, they'll just bring it down and bring it down and bring it down, and just kind of like death by 1,000 cuts. And eventually we'll see prices here going into the fall, end of October, November type of thing, and we'll see prices coming down into here. Keep in mind, crude energy prices typically do fall off towards the end of the year, seasonally speaking, and it looks like we're probably going to see some kind of narrative like that play out. So watch for that on crude oil. And then we'll look to see how things regain or reopen again come January 1, because typically after the month of January, crude oil, especially nat gas and some other energy markets, tend to pick up some steam, and we see some fairly bullish months for the first and second quarter of the year for those markets, and so that's kind of what I'm going to be expecting. So we'll see if that pans out. It could be a little bit of delay in there because, again, especially in North America and northern part of Europe and Eastern Europe and Russia and everything, it's all in the northern hemisphere, so obviously it's colder towards the first and second quarter of the year, early part of the second quarter, and so that's kind of right smack dab in cold and flu season. So it may be that it could take a little while for the numbers in the crude oil storage to start to burn off due to activity. But I think once we get through that, and again, this whole vaccine thing, they're going to rush this thing through as quick as they can. Once that comes on the scene, then I think everyone will start feeling like they're magically okay to go back to work and ready to go and reopen, and governments will start falling in line, and hopefully it'll be business back. Get business back going again. But until then, I'm not seeing crude, as I said, any higher. But I think hopefully by end of first quarter into second quarter of next year, we'll start to get there, and we can start seeing the numbers rebound a bit. But I'm definitely expecting lower prices. And look at the stagnation that we've seen in crude. We had these massive sell-offs in here, a huge quick return back up, and then just nothing since really early June. So all through June, July, August, and now into September, we're finally seeing a little bit of a sell-off, but we had absolutely nothing for 3 months. And rightly so after the stunning move down and back up that we've had. And we're still only, from the high here, we're still only 50% of that range that we've made back. We did make it up to about 60% of the range and gave that back quite quickly, but 60% of that range is still, there's lots higher prices to go on crude oil, I feel, in my opinion. And I know there's a lot of people out there who think that the world is going to get saved by alternative energy sources and wind and solar. And I mean, it's a great idea. Don't get me wrong, I'm not opposed to cleaning up the environment, but it's absolutely 100% impossible to do. You will not be able to power this world on that type of energy alone. You need non-renewable fossil fuels to do it because it's a cheap source of energy. It's abundant. It's readily available. And the power that goes behind it and the energy that you get from it is so much more than 1 unit of let's say oil versus 1 unit of solar power is not the same. It's not the same energy output, and so you get a lot more bang for your buck with oil and gas than you do with solar or wind, for that matter. And you can store it. You can store fossil fuels, whereas as the other ones you can't. Anyway, I'm going into a bit of a tangent here. I apologize. I'm trying to keep this short for you guys, but long story short, there's a lot of people that are calling for the end of fossil fuels, and I'm here to tell you it's not going anywhere. Those people are delusional if they think that's what's going to happen, because there is no alternative source that's reliable. And if you don't believe me, just look to what happened in California this summer, right? Massive power outages because they've shifted a lot of their grid onto solar and wind, and it's unreliable, and they had blackouts the whole summer long because they don't have enough energy to sustain it. And now they're talking about starting to go back to natural gas. And facilities in energy because their current demand well exceeds the capacity of solar and wind down there. And they're not the only ones. Germany, it's the same thing. Germany launched I don't even know what the final figure was on the clean energy that they had, money that they put into clean energy, and it's just been proven to be extremely unreliable and not meeting their energy demands. So, do you let the populace suffer and have massively high energy costs and aren't able to support your the power output that you need by using green energy that everybody is getting on the bandwagon with, or do you use cheap, reliable energy? Eventually, once people start realizing that, it'll start this hype will start going away. But until then, I would expect more suppressed prices on oil and gas. But ultimately, eventually, I personally believe it's not going to happen next year or real soon. But eventually, it's going to happen where the price of oil is going to get over $100 again. So anyway, that's my take on crude oil. Really quickly, gold, we're still in a tight range. I'm still very, very optimistic for gold that we're going to continue to see higher prices. But as the US dollar creeps higher, gold is going to stay in a range, and if not a range, it'll probably go a little bit lower. So we'll have to wait on gold. I'm going to put a hold on gold position for now. I'm not looking for any buys on it yet. I am watching it vigilantly every day, so if that changes, I will let you know. So sorry this was such a long one, folks. I do apologize. A little bit of macroeconomic stuff in there. We are in an election year in the U.S., so that's going to throw a bit of a monkey wrench into a lot of things. It's a pretty crazy world out there. But one day at a time, we will get through this, and we will stay profitable. So stick with me, and we'll make it through together. Thanks for watching, guys. If you need anything else, shoot me an email or get a hold of me at f45trading.com. And all my members, I will see you guys in the chat rooms tomorrow. And for everybody else, we'll catch you next week. Thanks for watching. Don't forget to like and share this. Leave a comment if you could as well, too. It helps me out. Thanks very much. I do this for free, guys, so that's the least you could do is just help me out. Give me a thumbs up. Share it out. Tell your friends. Get the word out. That would be much appreciated. So thanks for watching. Hope you guys all have a great week. Catch up to you next weekend.